Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So today I'll be presenting the twin webinar, which I give every month, tracking the forex market together, which will be given in two parts. Part one, I'm going to present it between 8 and 8:45 GMT. That is today, July 14th of 2015. And between 13 and 13:45, I'll give the part two of the webinar. What we intend to do during this? It is a simple market tracking technique. So we'll observe the live market using the live market code page and decide on the effective trading so that consistently we are able to earn from that other market. So that is a basic objective. We should be able to take a lesser time frame to choose the right type of currency and also the right type of trade. What is the right type of trade? Whether you want to do a sell and buy trade or a buy and sell trade. Then, in the event if the market goes against, what are the steps, contingency measures we have so that we'll be in a position to limit the risk and maximize the profit. So in order to do this particular way of analysis of the market, we're going for the three components, namely the statistically derived algorithm-based forecast, which is used for a long-term as well as session-wise market moves. And also we do the market reading, identifying the type of moves they are doing it after noting down the initial lows and the highs they set around 3:30 GMT. So with the help of this forecast and the market reading, we are in a position to decide what sort of trade we can do. Then we go in for the trading strategy, a simple strategy, namely sell near that of the high when the high has not been breached for more than 30 minutes from the start of the session, or take a buy near that of the low when the low is not been breached for more than 30 minutes from the start of the session. But still, we use the hedging order to limit the risk. And once the position makes 25 pips profit, keep stop at entry and remove the hedge order. That way, we are able to limit the risk and then try to use the trailing stop in profit-making position to maximize the profit. So, what we do with regard to the market trading. Before that, let me show you the forecast, what I gave it yesterday and also for today. Today is 14th. So they're expected to make the swing and slide during that of the Japanese session, and followed by that, the swing and firm up move during that of the European session. So we can do the buy and sell trade, buy near that of the low when the low is not been breached, and then we can book profit by late European session when they firm up. And those of you who attended the Asian session live market analysis I gave yesterday, that they wanted to make the drop in the market, and around 5:30 GMT yesterday, I was telling you that they were coming closer to the high and they wanted to make one upward stop and start making the drop in a big way as a weak beginning false move. That's what they have done it. And all through the day, they are just supposed to hold and make small firm up, but they continue to make an intentional move on the downside. So the forecast, we fine-tuned it with the help of the market reading, and thereby we are able to understand that all three sessions they wanted to drop the market. So that way we use the forecast and do the market reading, fine-tune the forecast. So today the market forecast says that they are expected to make a swing and firm up move during that of the European session. The European session starts by 7:30 GMT, and now we are by 8 GMT, 30 minutes past that of the European session. So what they are likely to do? For that, we try to compare the initial lows and the highs, what they set around 3:30 GMT, and find out where the market is. Now, you formed the initial low 1.0974 and the high of 1.1012. They breached the low briefly by about 7 pips, and the high by 1 pip. So they are just done either way stop-ins and widen the spread. And in the case of GBP, they just breached the low 1.5473. That was the initial low, and the initial high. In the quote page, it is wrongly showing 1.55. It was actually yesterday's, and today's high was 1.5491. And they breached the low and staying below that of the low. And the low what they have formed during that of the Japanese session, 1.5452, they are not breached it. So they are still holding below that of the initial low, but the new low, they are not breached it. So it is a question of they are doing an extended move on the downside, holding low in order to induce the traders to go short in the case of GBP, and then subsequently they wanted to gain the level. So in the case of Euro, they are trying to make swings, and in the case of GBP, they wanted to create the market sentiment, the bearish sentiment, by holding it below that of the initial low, but not breach the new low. After the start of the session for 30 minutes, they are unlikely to breach the low, and they are expected to go up. Then in the case of yen, 123.39 was the initial low. They came down to 123.20 and gone above that of 123.39 and staying there. So they are expected to gain more level, and 123.73 was the initial high, and that was not been breached. So they can do a buy and sell trade because they had done a brief downward stop and afterwards they are making the gain. So we can do a buy and sell trade in the case of GBP, buy and sell trade in the case of USD-yen. Then in the case of CHF, 94.94 is the low. They are not just breached and holding below that. So they are likely to, and the high has not been breached, they are likely to come down in the case of USD CHF. We can only do sell and buy trade in the case of CHF. And if you watch carefully, that in the case of Euro, they are just shown 4 pips positive net change. In the case of CHF, they are showing 32 pips negative net change. That means they intend to make a one quick drop in the case of USD CHF. Since they are holding below that of the initial low, we can do a technical trade of sell below that of the low and try to cover it during the downward move. And in the case of Canadian dollar, 1.27634 was the initial low, which has not been breached, and the initial high was 1.2764, and they breached it and went up to 1.2804 and started coming down, but still holding above that of the initial high. They are unlikely to make a big drop, so we will not touch that. Then, in the case of Australian dollar, 0.7388 is the low, 0.7432 is the high. They just breached the high and went up to 74.37 and come below that. They are expected to make a small swing in the case of Australian dollar and later on go above. So they are not breached the low, they are likely to go above. In the case of Euro also, they have started gaining the level. So how we can think of the trading part of it? Let me take the positions and later on explain to you. So in the case of Euro, already they gained, it doesn't matter. So we do a buy, limit we'll keep about 5 pips below that of the market. So it will be 1.0997, 5 pips below. And in the case of GBP, they are closer to that of 54.52. So 54.57 will buy. In the case of yen also, I told you that we wanted to buy. So 123.41 we will buy. Okay. So two positions I had taken, and one I kept the limit order to get it filled, fine tune our entry. If it is not getting filled in about 10 to 15 minutes of observation, then I'll try to take it at the market. Then we have to keep the hedge order to limit the risk. So 30 pips below that of the buy order, $1.0967, which will be a sell stop. Then in the case of GBP, 30 pips below, which will again be a sell stop for a buy position. And in the case of yen, also we are doing buy and sell trade as a contrarian trade because they are making the contrarian moves now. So we'll keep 30 pips below the hedge order. $123.11. So I do not want to take positions in all, and we will try to only take positions in 2-3 currencies. If you want, I can take the case of Australian dollar, which is likely to go up because they have not breached the low from the start of the session, and they made an upwards stop and come down, but not gone below that of the initial low, indicating that they wanted to make an intentional move on the upside. So we'll try to take a buy position. $0.7428 with the hedge order or sell stop. This is 0.7398. Okay. So these are all the positions what I envisaged. Euro, I just kept 3 pips below the market. The buy order, it's a limit order, so that I'll fine tune my entry. And I just taken the buy position in the case of GBP and buy position in the case of USD yen, and also buy position in the case of Australian dollar. Okay. Just I wanted to explain to you how by keeping a limit order, we'll be able to fine tune our entry. In the case of GBP also, if you try to keep a buy limit order like that, you will be able to get a fill. But I just taken it very close to that of the low, and they cut the low by new low by 1 pip and started gaining it. It is a trick of the trade. That's how they do it normally, and then start making the rise. At times what happens, they may just show a new low by 1 pip, but if you keep an order, the platform will not fill it. That's what happens many of the occasions. So in the market trading, what we do is we note down the initial lows and the highs around 3:30 GMT. That's what I have shown it in the earlier slide in 4 majors and 2 commodity pairs, and try to find out with the help of the live market put page where they are during that of the start of European session. So in the early European session, when you compare it, that they not breached the low in the case of euro, but breached the high by a few pips. And in the case of yen, they breached the initial low by a few pips and come up. And in the case of GBP, they just breached the initial low and staying below that of the initial low. So after 2 hours, they will start gaining the levels from 10 GMT, 7:30, 9:30 GMT. So we are at 8:15 GMT. In another 1 hour, they will start gaining the levels in the case of GBP. And CHF, I have not taken it, but anyhow, I was telling you that we can do a sell and buy trade. They are likely to come down. And Canadian dollar, since they are holding above that of the initial high, and also made further rise to that of the psychological level, they're unlikely to come down in a big way, and they will only make swings around this. So we may not get a good trading opportunity. And in the case of Australian dollar, I have taken a buy position because they are not breached the low for 30 minutes from the start of the session, and they made a brief upward stop and then come down and holding it, not going below this level. So I had taken a buy position. So that is what the trading decisions were taken. And then subsequently, we will calmly watch. And we know very well they are expected to make the swing and form up move during the late session. So we need to understand the session timings. So 7:30 to 8 GMT is first 30 minutes from the start of the session. And then we have to find out whether they breached the initial low or not. They breached it and formed the new low. The new low has not been breached as we have seen in the case of GBP. That means they are holding below that in order to handle the crosses, especially Euro GBP, and then subsequently start gaining the level. And those of you who attended the webinar, what I gave it yesterday, the Asian Session Live Market Analysis, I was explaining that they wanted to, they had done the sequential moves. So after that, the commodity pairs and the commodity crosses, they come to that of the N crosses last Thursday by making about 400 pips drop in the case of GBPN. And then on Friday, they simply reversed the market and started making an upward move. And finally, I was telling you, Monday, they are going to handle the European crosses in a big way. So yesterday, you would have noticed that they just made the contrarian move of making a big drop, even though the news pertaining to that of Greece was positive, but still they made the drop in the case of Euro about 150 pips, but holding all along GBP around 1.5550. What happened? Euro GBP made a big drop yesterday and started gaining it from there. So that's what, and also in the case of GBP CHF, they made a positive move, positive net change in the case of GBP yesterday, and also USD CHF positive net change. As a result, GBP CHF was also making a very big rise yesterday, and now they are doing a reversal of it. So that is what they try to do it in the market. After gaining all the levels, they simply dump all their positions and afterwards allow the market to come down and again pick up at the lower level. Because they are doing this sort of churning, it is the beginning of the third quarter. From that of July up to September will be third quarter. So in order to buy at the lowest level, what they do is they just buy around a level and gain the 100 pips and hold it. Then automatically the traders come for a breakout trade and try to take a buy position after that of the resistance is breached and they stay above that of the resistance turns support, and then the traders buy for a breakout trade, then the players drop it. And the traders who have taken the buy position liquidate the long position and become sellers. And everybody says that on every pullback you try to sell. Okay, then the trader, you find that already the market has dropped, so it takes another sell, thinking that it will make for the downward move after developing a bearish field. Then the players again gain the levels. So this is what they are trying to do it. After dropping at 400 pips in the case of GBPN, they almost gained all the levels what they are dropped in the case of JBPN. From that of 187, they just gained back to 190. That is what they tried to do it. And we say market is so huge, it cannot be manipulated. In one day, we agree that the economic condition can totally change in the world. And if any economists say that in just a matter of 24 hours, the economic condition of a country is going to be changed, then we can understand market is following the fundamentals. But we know very well it is totally a manipulated market. So in that process, they just drop creating a bearish field. Then they continuously gain the levels. And again, when the people turn long after the gain, then they drop it. So this is what they do it during that early part of the third quarter. After accumulating the buy positions at the lowest level, they will consistently start gaining the levels from that of next week. And then we'll be able to understand that they have done all these things on the lower level in order to accumulate the buy position, but creating all bearish field. So how will we be able to identify all those things? We have to find the type of moves they are doing it in the market. So if you use the live market quote page as the only tool and try to find out what they are trying to do it in the market, pip by pip, you will be able to read it with the help of the live market quote page, both in the case of majors and the crosses in a single sheet, so that it will be available in comparable conditions. You can easily understand how they are making the moves in the case of major and bringing in the variations with regard to the crosses. So that if you understand, you will be able to choose the right type of currency at a given time and capture the profit out of that. Now the type of moves, what they do basically is a stop end. Stop end is a move that they do it above that of the initial high briefly in less than 30 minutes, about 15 to 25 pips, and then reverse in less than 30 minutes, start going downward after the upward stop end, or after that of the downward stop end, they start gaining the level. So they do the stop end mainly to hit stops of the long holders before making a rise. Hit the stops of the short sellers above that of the initial high, and then start making the drop. So basically their idea is don't give the profit to others. So if anybody is trying to do a sell and buy trade and they has taken a sell and kept the stop, so they hit the stops first, so that they are able to sell at the highest level. By hitting the stop, your stop buys at the highest level, and they fill it there. They take the highest level sell by hitting stops. And afterwards they come down. Those who are taking the long position liquidate at the lowest level and they buy at the lowest level. They use common sense. Sell high and buy low. But they induce through that of the technical analyst, telling that you buy high and sell low. And telling that supports in the resistance, you buy above that of the support, you sell below that of the resistance. And that sort of explanation invariably in the form of technical trade or in the form of breakout trade. And then when you find that the breakout trade also is not working, then they say that, no, we have changed our system of trading. So you follow the new system of trading. Otherwise, if you are not able to follow, they have that automatic trading system, which has got its own algorithm, which will be able to trade and evaporate your equity. That is what they are trying to do it for those who are really frustrated and trying to earn money from the market. In the process, you find not only the players manipulate the market, and all others, those who try to extend help to that of the traders, also try to earn as much as possible quick money. So we need to identify the type of moves they are doing it. All quick moves or false moves in the market. Understand it. So when they make a quick rise or a quick drop, that means it is a false move. The opposite, they wanted to do it slowly as an intentional move. So if you understand that, then you will find, okay, you are in a position to earn money from the market. Then the stop and the false move happen in less than 30 minutes. They try to pretend as if they are going to rise and then drop, or pretend as if it is going to drop and then rise. Then the extended move is the one they hold below that of the initial low and the new low, like in the case of GBP. For 2 hours, they will hold it like this. So what is a big deal? No, when they are able to rise euro, why not they rise euro another 20 pips, GBP another 20 pips? They don't do that. They do the extended move. They gain up to the 1.5472 and then come down. 1.5473 is the initial low. And then they hold it for 2 hours from that of 7:30 and then start gaining the levels. So why they are doing it that way? Euro GBP cross, they are handling it by showing euro in positive net change, GBP in negative net change. So ultimately, every move has got a purpose. Every move, they wanted to earn money from the other market. So that we need to understand and try to capture. The good moves, they are doing it by patiently waiting for such good moves to happen in the market and then take positions. You will be able to really book profit. What is that good move? It is a move which happens as an intentional move. The intentional move is the one which happens for more than 2 sessions, more than 2 hours, more than 2 sessions, and the start of the third session, they reverse it. So if they started from that of the Japanese session, they gain the level through that of the European session, and start of the US session, they make one upward quick move and then reverse the market as an extended move, because after the intentional move, they always make the extended move. And in between, you come across a session change, gap time, and also mid sessions. Then they try to make the stop and during that session start, and false move before that of the data release and during the gap time, and also swings during that of the mid session. So these are all the type of moves they are doing it in the market. So now they are gaining the levels. We have not got the euro position. So that is why I taken the GBP. But euro, when it is not available, we are supposed to pick it up, but they already breached the initial high and new high and started gaining the level. So we will not chase it, but we have got other positions to make profit out of that. So how bearishly they kept the market and how they are doing it now during the European session. You think that because of the data release or because of any other matter for that matter, or somebody has given a speech, somebody has encouraged the people to gain confidence, etc. You might come across so many attributes, but ultimately you find the players will make the moves according to their whims and fancy. Yesterday, the Greek deal was achieved to a greater extent, and everybody was expecting euro to go up, but they made the drop. That happened to be a weak beginning. They had to make a weak beginning false move on the downside. So they simply discounted the Greek deal. All along, they have been talking about the Greece. All along, they said that it might exit out of euro. And finally, when some sort of understanding has come in, they simply dropped euro and telling that, no, that is not enough. And now you will find that after the weak beginning false move on the downside, they will slowly accumulate and gain the levels in the case of euro and breach yesterday's high and start going above tomorrow. That's what they do it. Last week also they did it. And every time they just pretend as if the market is going to drop and then subsequently they rise. So that we need to understand by identifying the type of moves. Then the important thing, namely the hedging. Why we need to use the hedging? Because, see, in the market, we are going for the leverage trade. If you are doing the currency conversion trade, suppose you have about $1,000, you buy equivalent $1,000 the euro in your account and hold it. Then when euro drops also, there is no problem. Because you have the US dollar converted into euro. Once euro becomes stronger, you will convert into another currency. So there is no leverage involved. But in the platform, you'll come across the minimum leverage is 1:30. That means 30 times of your margin, they give that exposure for you. And other banks, they give 1:30. And in some of the platform, US platform, they give 1:50. And other European platform, they give 1:100, 1:200. And there are market makers, they give 1:500, 1:1000, etc. in order to grab your money, so that they take only $10 for a position. So you think that, okay, let me take 50 positions, they will only take $200. That is how you just think when the high leverage is given. The high leverage is given in order to induce you to overtrade. When you take huge positions, when the market goes against, all the positions will be incurring loss. Your usable margin, free margin, will get evaporated. And then there will be a margin called fear. So to prevent it, the common strategy is you stop. Whatever the stop, you are bearable. Suppose you can accept up to the loss of 30 pips. Okay, keep stop at 30 pips. But what happens? Just keep 30, 35 pips stop. Then later on, you find that the players hit the stops during stop and then reverse the market. Then the traders thought that no, 30, 35 is not enough. So we have to keep the stop below that of the support. So when the support is here, 1.0967, then probably 1.0957 or 55 will keep the stop. That will be better. That's what the traders think after taking a buy in a breakout. What the players do, they simply hold there and see whether the stops are accumulated below that of the low, make one whipsaw move on the downside, hit all the stops and start gaining upward. Then what to do? So wherever we keep stop, they are hitting it. Then the traders think that it is better to trade without a stop so that they cannot hit. So they think that it is smartness. But ultimately what happens to the smartness, they make during that of the monthly trend reversal time, a very big downward move as an extended stop and move for about 150, 200 pips and reversed in the same day. Then if you are trading without a stop and also you are taking more positions, your usable margin get eroded drastically. And finally, you find that there is a margin call attraction. And as a result, the positions are closed because of margin call. So what is the best way to handle situations? So as soon as we enter into the market, we are also inviting risk. Because we are going for a leverage trade. So when the leverage trade, when you don't have adequate margin to protect the positions, either you should take delivery of the currency, otherwise in the leverage, you have to close the positions. So when you are not in a position to close the position, you are expected to stop out. But if you keep the stop out, the stops will be filled very frequently, which will discourage you from trading. Then what is the alternative? Use hedging to limit the risk. So when you use hedging to limit the risk, what happens? There are platforms offering the hedging, but US trading platforms do not offer hedging facility. And so in the same currency, suppose you've got a buy position in the case of euro, we'll be able to hold a sell position in the case of euro. That is what the hedging is. Or they call it as the buy stop and sell stop. And in that process, what happens when it is, we can place an order as a sell stop, and if it is filled, only then the position is hedged. And if it is not filled, your free position will, if it is making money, you can simply remove the hedge order and keep stop at entry in your buy position. Then afterwards, you find your buy position is making profit on the upside. So ultimately, you need to understand how to use the hedging, and in the event if it is hedged, how to close the hedging. You should not say that I am struck in the market. Both I have the buy as well as the sell, so I am really struck. And that is what many of the people, the platform providers in US, they were telling that if you want to use hedging, that means you do not know how to trade. but they fail to compare it with that of an automobile. In the automobile, in a car, you have the forward moving gear, backward moving gear. And if you have the forward moving gear and the backward moving gear, and also a brake to limit the risk, probably they may say we do not know how to drive the car. Okay. So ultimately, it is a question of art of trading. So if you learn the art of trading, how to use the hedging and how to handle the hedging effectively, and then try to earn out of using the hedging. And even if they suddenly make a drop in a big way, if you are hedged and your hedging will be making profit during such extended downward stop, and after booking the profit, keep another hedge order to limit the risk, then they will reverse the market on the upside. You book profit both on the sell side and the buy side. And that is the greatest opportunity you come across when you use the hedging. So try to understand how the hedging can be effectively used. And also you can simply use it instead of stop. And once the position makes profit, you can keep stop at entry and remove the hedge order. Otherwise, you can simply reverse the trade also. Suppose the hedging is making profit and the original buy position is making loss, you can simply close the buy position with 40-50 pips loss and earn more than 40-50 pips in the sell side. Then you earn net profit. So ultimately in the market, the trading strategy is going to consistently earn money for you and not the forecast and the market reading. That's what I wanted to emphasize. So this is what I explained it with the help of the previous slide. Now these are all the orders. So we could not buy Aero, that is not filled. And we bought a GBP, which is in the money now. And USDN, which is not making profit, and they are slightly below, and they are expected to come up again after gaining the levels. So in order to give that impression that the market is making the USD gaining and the USD weakening more alternatively, and then they will slowly change the exchange. But if you carefully watch it, still GBP USDN is making negative net change, and GBP USD is also making negative net change, a contrarian move. Here again, you come across a contrarian move in order to handle the crosses. So they handle the majors, then come to the crosses during the mid-session, handle them, and then again they start making further moves. They are expected to gain the levels in the case of USD and also in the case of Australian dollar. It is almost close to the buy level with 1 or 2 pips loss, and they are likely to take up Australian dollar also on the upside. So by late session, we will be able to see the outcome of that. We have got the hedging order to limit the risk. And in the event if the hedge position is hedged, then I'll narrate here what I had done with regard to the hedging and explain to you how exactly I resolved it, and thereby I was in a position to make net profit at the end of the day. That's the most vital thing. So there is no point in talking about Greece and yelling at Greece economic conditions or just shouting at US economic conditions, etc. Because by doing that, you're only shouting against the television and not against anybody. By that, you don't earn any money out of that. That shows your frustrated condition, you are expressing it. But instead, you know that such emotional traders continue to lose money in the market. Instead, you have to control your emotions, and thereby you will be able to understand, let the economy go anywhere they want, and such economic conditions will not change in a matter of few hours. These are all nothing but the swings in the market happening. And so if you want any country growth, you just put the seed in the ground, and you cannot expect the seed to grow into a plant in just a few minutes. You have to wait for it. Similarly, any economic reforms, any economic changes they bring in the ministry and with regard to the economic conditions, and it will take some time for them to give the yield. But since we are traders, we become impulsive and we want the currency to move in our favor as quickly as possible and grab the profit. And because by that process, we lose the basic quality of human, namely patience. So when you lose patience, we lose everything. So ultimately understand that patience is virtue, and only with the help of patience we'll be able to earn money from the other market. As I told you that we have taken the position and kept the hedge order to limit the risk. What are the two possibilities in the market? The market can continue to gain the level and show us the profit by end of the session so that we will be able to book profit. Otherwise, the market can come down, hit our hedge order and go up. Fine, there is another alternative. So in the event, we will watch the hedge, whether the hedging is making profit for about 10 to 30 minutes. If it is not making profit, that means we understand that it was a mere stop by which they just hit the stops at the lower level and started gaining it. Then what we do is we close the hedge order and keep another hedge order 10 to 15 pips away from the market and then watch them taking up the market on the upside and book profit. And the third alternative is they hedge your position and continue making downward move. In the event, you can simply close your buy position if the hedge is making profit for more than 30 minutes up to 2 hours. That means they are making intentional move on the downside. Then when it is making a downward move, then you can simply close your buy position, maximize the profit on the sell side. We know pretty well the intentional move is for 2 sessions and the start of the 3rd session. Thereby, by the US session, the start of the US session, they will come down drastically and you can book profit. A net profit can be booked. So there is no difficulty in trading if you have a perfect understanding of the market. Market means it can go either upward or downward, nothing more than that. The players cannot do any gimmicks other than that. And I have studied all their moves and I have been talking openly in FX trade from 2001. Till date, they have not changed the strategy because there is no other alternative strategy available for them to do it. That's what we need to understand. So ultimately, read the intentions of the players, then automatically we'll be able to successfully earn from the other market. Because if you want to be a successful businessman, you need to read the intentions of the clients who are coming to purchase commodities from your shop. So we have to find out in what way you have to display it so that they will be attracted and they will buy and give you more business. So that way, we need to read the intentions of the customers. Here, we need to read the intentions of the players. And that can be done only with the help of the live market quote page, not with any of the statistics. Because the players know very well, predominant of the traders use the statistical calculations and that of the charts, and they try to find out where the supports and the resistance, where the supply and demands, and then try to take the positions. But the players know after taking positions where they are keeping stops. So they are more interested in stops. So when they hit your stops, they gain automatically. They trade against you. That is what the market makers are doing. So when you try to take the positions, they trade against you. And you will be wondering when the platform is trading against, how far they will be honest. That is why you come across most of the market makers, they wind up the show and run away after some time. Okay, let me answer to the questions which are asked here. Aditya, Australian dollar was near that of the high, but not breached the high for 30 minutes after start of the European session. Should we take a small sell? Yes, we can take a small sell and then try to book profit during a small dip and then do it. But ultimately, that swing was only for about 10 to 12 pips or 15 pips. So you have to always aim for a larger profit so that at least you will be able to get about 45 to 50 pips. If you aim for 10 to 15 pips profit, you will be tempted to go in for scalping. No, don't do that, because once you go into that of scalping, invariably you become impulsive and you do not think about anything else other than trading, and in that process you lose your life. The very purpose of earning money is to make your life comfortable, but in the process you make your life miserable. So don't go in for scalping. That will make you more and more impulsive, and also the uncertainty will kill you like anything. You will quickly develop blood pressure, etc. Your health will be affected very badly. Then Monal has got a question in question answer window. Currently have a position USD CAD at 1.2770. I am currently hedged 30 pips. It's now been 10 minutes. Would you recommend closing the hedging? Oh, sorry, I'm reading the question late. Already, so when you say 1.2770 as the sell position, I was telling you that USD CAD is they breached the initial high and gone above that of the psychological level and come down, and they are expected to swing around this level. My humble suggestion will be try to close the hedge as well as your original position with a lesser loss or a profit. And when they dip slightly close at 1.2770, you close it. Again, when they go to 1.28 by end of the session, because they are doing the contrarian move, you close your hedge also. As I explained that when they make such moves, between the initial high and the new high, like GBP, but GBP is a major currency. They have to make necessarily the move in order to create the sentiment. But Canadian dollar is a currency wherein they don't make big moves all the days. So they make either way stop-ins on the upside as well as the downside. You need to really understand the behavior of the currency in order to take positions. My humble suggestion for Canadian dollar for your position is close them with a nominal loss or a profit and get out of the position. Can you go back to the previous slide? Okay. Can you give us the exit level? So the exit level is 45 pips from that of the entry to start with. If the going is good, then you can keep the limit up to 75 pips. If they are making an for 2 sessions, then you can keep about 150 pips net change level. You can see here the net change. You can watch up to 150 pips net change level. Now it is say 36 pips. So another 114 pips or 116 pips, if you keep above the limit, they will fill it if it is an intentional move. On last Friday, they made the rise like that, 150 pips. If you kept the limit there, you would have maximized the profit. So there is no need to go in for support and resistance calculations. You can find out up to what level they will be able to rise the market and accordingly keep the position. Because all these conventional statistics, the players know the traders are going to use it, and finally after taking position going to keep stops. So they are interested in hitting the stops. That's what most of the time you come across. Then Biswanath, what about possibility of triggering both the limit and hedge order and price lying in between? No, that's what the trading strategy is. Suppose I got a buy position and then the limit is kept. Okay, when the buy position makes about 20-25 pips profit, I'll remove the hedge order and keep stop at entry here. In that, the scenario can be they can hit the stop at the entry or the limit. Then when the market is going upward, we will trail the stop, maintaining 15 pips away from the market. So the market can either hit the trailing stop or manually you can do the trailing, because many of the platform, when they give auto trailing, they quickly identify your stop and fill it. So you do it manually, and then it can either hit the stop or it can hit the limit. Thereby, we'll be able to get the minimal profit or maximum profit. Once a position is closed with profit, you give a gap of 30 minutes before entering to the next trade. The ideal thing will be watch for 30 minutes from the start of the session, the next session, and then later on enter into the market, identifying the type of moves they are doing it. Is there any other questions so that I can answer to the questions? So they are really making small swings in the market now. If you watch carefully, they are not heading either on the upside or on the downside. They are alternatively making small swings. And later on, in order to handle the crosses, that is why you come across all contrarian move, like GBP negative net change and USD CHF in negative net change. I was telling you that we can do a sell and buy trade in the case of CHF. They had dropped it. And GBP also, they are holding it, like they're pushing down, because yes, Friday they gained the level in the case, and also Monday they gained the level in the case of GBP CHF. After gaining it, they are booking profit. At every level, they are dumping it. So, and again, they will buy back when the stops are triggered, and then continue to gain on the upside. That's what they do. So the sequential moves, what they are doing it in the market, we need to read it so that you find that what is the right currency I have to choose at a given time. When they are doing contrarian move like this, the case of GBP and USD-yen. So if you want to do a trade in the case of the yen cross, the ideal yen cross will be USD-yen and GBP-yen or a negative net change. Whereas in the case of euro is positive net change, GBP is negative net change. So you find hardly any move in the case of euro-yen. And in the case of GBP-yen, you find the move is slightly on the downside. It is closer to low. When they form the low like this, when the new low is not been breached in the case of GBP, in the case of USD-yen, and also in the case of GBP-yen, you can take a buy there. Keep 50 pips hedge order in the case of crosses. And when it is not filled, try to keep stop at entry and maximize the profit on the upside. Okay, I came late. What do you expect to happen on euro? I explained that euro is expected to slowly gain the levels during this particular session. Okay. Any more question, please, so that I can answer it. Otherwise, I will come back by 13 GMT. And by end of the European session, start of the European session, we have taken the position. And you just see, and I don't have a position in the case of euro because I missed it. I kept 10 pips below that of the market. The order which was not filled, but other three positions I have taken. I'll come back by end of the session, 13 GMT, 13 to 13:45 GMT. I'll give the part 2 of the webinar. And also we will compare the levels, what you currently see with that of the levels, what they show during that of the gap time before that of the US session, then understand what sort of trade we can do. So market continues to give trading opportunity, provided you read the market wisely. And for that, what you are supposed to do is Wait patiently and look for some quick moves in the market. When they quickly make an upward move, don't become emotional or don't become suddenly bullish. You just watch, okay, they are making a quick upward move, and afterwards they are not able to breach the new high what they are set for more than 10 minutes, and that shows that they wanted to drop the market after hitting all the stops on the upside. Then take a sell there as an opportunistic trader. You'll be able to capture the profit in 10 minutes. And my humble suggestion will be you wait patiently without a position. When the quick move happens in the market, enter into the market in a very short duration, will be able to maximize the profit so that you it will not become a stressful trading at all. So see you by 13 GMT. Until such time, you can watch the live market code page using that and find out what sort of moves they are doing it in the market. And please come back for part 2. Alex, give more information pertaining to the market trading. Thank you one and all. See you again by 13 GMT to continue the webinar.